You're going to tax me 50, 60, 70, 80%? All the entrepreneurs of Europe say, yeah, I've had enough. Goodbye. Because capital doesn't have to stay there. Desperation to get away from US dollars led a lot of governments and their central banks to dive into gold. And people like us are diving into Bitcoin. If you can't own Bitcoin, you should own Bitcoin proxies, but I don't think those are treasury companies. I think those are really the Bitcoin ETFs. In our world, I think it's going to be a lot less about cycles and a lot more about the expansion and evolution of money flows. War is very easy to conduct when you could just print currency to pay for it. But Bitcoin doesn't allow that. The largest group that controls the most have 5 trillion. Rothschilds are a step down at 3 trillion. Soros is a step down at 1 trillion. And that's how the world actually works. It's absolutely flabbergasting.
Hi, Alan. How are you doing? Everything fine on your end?
Hey, everything's going great. Glad to get reconnected with you since Las Vegas and the Bitcoin conference.
It's been, there's a lot happening in Bitcoin. It's almost like a year in Bitcoin feels like a decade in normal life because there's so many events kind of happening within a year.
Yes. It's kind of a whirlwind of what's going on. I think all of us keep waiting for the big move that keeps getting delayed. I think we've been sitting for a year just churning and churning and churning. So it feels like we're getting about to that time of the process. I won't say cycle anymore. I'm not real convinced we're going to have cycles, so to speak, but I guess we'll find out.
Yeah, that's an interesting question. It comes up a lot because it's like we have different 2025 than maybe 2021 was or 2017 was when we look at those full year things. And then maybe we also get a different 2026. Maybe it's just like delayed and all those different like theories. And I get that like now the question comes up more and more of like, oh, how do you look actually at like 2026 now as 2025 wasn't as it was different than people predicted to be.
Yeah, I think the best parallel I can come up with from what I've looked at, since we always compare ourselves to gold and we're just digital gold, and you buy it for the same reasons, except, digital gold is better than physical gold. I think the reality is it's going to be a lot of when the GLD, the gold exchange traded funds started. It's real fascinating to watch the flows of money that happened and the staggering amount of money that went into the ETFs once they were opened up finally. So I think in our world, I think it's going to be a lot less about cycles and a lot more about the expansion and evolution of money flows that were tied to what was happening with the launch of GLD originally. And then if you think back when we launched, Bitcoin ETFs and IBIT and all the others came about, sort of the same thing has happened. I mean, you've seen BlackRock go from zero to more than $100 billion in an ETF. And I think when you trace the history of gold, we're going to see that Bitcoin is going to mirror those money flows in a pretty major way, I would say, over the next 5 years.
Were you surprised that gold kind of outperformed Bitcoin this year?
Actually, a little bit. I was surprised. I think that's reversing a bit now, but I think when you start getting governments and sovereign nations buying from their central banks, that's a whole different behavior. I think that the desperation to get away from US dollars led a lot of governments and their central banks to dive into gold. And people like us are diving into Bitcoin. So I don't think you're going to get the state-based, government-oriented central banking behavior to change. And I think they love the concept of gold because that goes into their coffers and they centralize their ownership. And it just looks like the traditional financial system all over again. So from that standpoint, I'm not terribly surprised to see gold take off. But it was a pretty breathtaking move. And, Bitcoin has really just been churning sideways at the 6-digit prices. And I think that here in the short term, the ratio between gold and Bitcoin is going to rectify itself.
So you're kind of expecting that like gold had a moment now, and now it comes to the other side that Bitcoin has the moment in the later this year, because like usually October, November, December, especially in this time, like is extremely strong.
Yeah, I mean, I can't come up with any good reason as to, it's not really that I think gold has to plummet for Bitcoin to do better. I think people are buying both for just different reasons. And the more traditional you are and the more used to the traditional financial system you are, the more physical gold is going to look like the thing of appeal. But I think once that starts reversing a little bit, and doesn't trade like a meme coin, you're going to finally see gold behave the way it has, and you're going to see Bitcoin really accelerate. So I've been positioned for an assumption that here in the fourth quarter, we're going to see Bitcoin start accelerating. And I feel like we all feel long overdue for an uptick in price to 135 to 150 range. And then we kind of will see where things lead from there as corporations and governments keep buying at bigger and bigger volumes.
How do you actually look? Because like we've got this, and I usually make it like the first episode with the guest. I always try to figure out like who's the guest a little bit, and so we
Sure.
had this last time, and so for the people that are might confused like who you are and all of that, they can check out the last episode because I think we've done a great job there, and so I think you are a great person to speak of also about treasury companies and like the public market because you have been in the
Right.
public market and with all those products so deeply involved and have such an great understanding for that. Where is the current like understanding for you in like what Bitcoin treasury companies are doing and where their kind of status is and like what their role will be in Bitcoin going forward?
Yeah, that's a great question. So I jokingly say a recovering ex NASDAQ CEO. So I'm trying to get back into doing a little bit more traditional angel investing, public market investing, and things like that, as opposed to just wearing an operational hat. It's been fascinating to watch the replication of treasury companies, not just MicroStrategy here, in the United States becoming a dominant force in terms of its Bitcoin holdings. Clearly, no one's gone all in quite the way MicroStrategy did. And then you just get the copycats. And there's two forms of those, right? There's the form of them where there's one company per stock exchange per country around the world. And you start seeing a treasury company in France and a treasury company in Germany and a treasury company in England and so forth. And I think that they're just trying to look over at what Saylor did and what Strategy's doing. And they're just trying to say, hey, I'm going to be the lone option for that in our markets, domestically in our country. And they're executing those. The Bitcoin Opportunity Fund has invested a lot of money to create, a singular Bitcoin treasury company per country or exchange all over the world. And it'll be fascinating to see if there's just one of those, like a Meta Planet in Japan versus, all the derivatives of them around the world. They're all getting a lot of liquidity. They're all getting a lot of investment interest. And in those foreign markets, their exchanges or their countries may be yield starved so badly that they want to provide money out of the bond market in those countries into equities and get Bitcoin exposure, but they just can't legally do it within those funds. So I think strategy is going to dominate in the US. I think you're going to see one treasury company per country or exchange around the world that will remain viable. What I don't really know is all the other copycats and what really is going to happen to them. So far, the best I can see is that, it requires an influencer or it requires a very known investor or some kind of institutional stimulus as to why anyone should care. And the best metric I've seen so far is the MNAV, right? Is you're at a discount if you're below one. You're kind of in danger if you have a premium to one and your name's not strategy. And you just see this churn. So I think that, everyone in your audience and the folks that I talk to at a retail level, I really try to encourage them. Okay, first of all, just buy Bitcoin. Like, why are you trying to get more cute? You don't have enough Bitcoin. Start with Bitcoin and just hold Bitcoin. And if you have brokerage accounts or 401ks or Roth or traditional IRAs in the United States or its equivalent internationally, a lot of people I still advise, okay, if you can't buy physical Bitcoin and cold storage it, and self-custody it, then the next best alternative is at least buy a Bitcoin ETF like IBIT, and at least you're getting exposure to the price of Bitcoin. And it's kind of weird to watch people who don't do either. They're like, I'm going to go invest in a treasury company. And I'm like, why are you doing that? I can't really come up with a good, compelling reason why somebody should be trusting the execution of a management team, the operations of someone trying to do something in parallel to Bitcoin. And even worse, a lot of these that are coming out of special purpose acquisition companies or SPACs that are already trading publicly, that have all sorts of equity overhang, warrant overhang, and they're basically taking this publicly traded SPAC, combining it with some other company, throwing some big name or influencers around it, and then saying, hey, we're going to be a Bitcoin treasury company, and this is a much better deal than just buying Bitcoin. So I don't really understand why people are doing that, to be candid.
It reminds me a little bit of altcoins, because this is the strategy usually used by altcoins of like, hey, we have a roadmap, we have a marketing angle, and then we'll just acquire someone that speaks for it, that has some respect in the field, like paying an influencer. Obviously, I know like an actual company is like vastly different than
Right.
than altcoin, but if I just look at the feeling that I have from that, it just weirdly reminds me of them.
Yeah, and I also have spent my whole life just focusing on investment themes. And I invest heavily in those themes until I think the theme is played out. And so when I think about during my adult lifetime, I mean, I'm 56, so I'm a little bit older than you there, Robin. And when I go back to the late 90s, you basically had the Telecom Act in 1996, which triggered all this investment in privatization, telecommunications, and networking equipment providers. So you saw the entire change. I used to call it the Nellas, Nortel, Ericsson, Lucent, Alcatel, and Siemens. And then that was migrating from time division multiplexing to internet protocol. And that migration from circuit switching to packet switching led to Cisco systems and Bay Networks and 3Com and all these other players that were going to come in. And at that time, the incumbents tried to say, no, we're going to build a bridge, to this new world order. And it wasn't a bridge. It was really a forklift. You just threw away the old stuff and you bought new packet switching and IP and internet centric protocol stuff, and it all went away. So the first theme was really this networking and telecom activity. In parallel, that theme was amplified, of course, by the internet. And what is the internet? Well, the internet comes out, we have a Netscape browser, and suddenly, in the mid 90s, we start getting really used to like dial-up internet access and 56K modems and that unique little sound of an AOL email and all the access to the internet. So then the internet booms, right? And we went through that all the way up until it blew up in the late 90s. And that theme didn't go away. It just was very early. So there was a lot of carnage around what kind of business models to use and where did the financing come from. So you had datacom and telecom sort of start exploding and blow up. You had the internet expand and blow up. Then all of a sudden, Apple comes along with the smartphone, right? And we get one of these. And the iPhone shows up. And suddenly when the iPhone showed up, the incumbents, which were people like Ericsson and Nokia and others that were doing wireless, and two things happened simultaneously. Countries around the world who had no infrastructure didn't have to forklift the old stuff and put wireless infrastructure. They all just went straight to wireless. But then instead of having, these flip feature phones, which there were 5 billion of, and Blackberries and things like that, smartphones came along. And the iPhone, it wasn't, again, a bridge. You didn't keep your flip phone and then, add one of these to go with it. You basically just threw the phone away and you went to the new thing. So the first three themes that I ended up playing a lot in was this theme of telecommunications and its parallel theme of going all wireless instead of wireline. And then you add this parallel theme of just all things are going to go to the internet, and everything digital is worth more than anything that's analog. So those themes to me set a backdrop, which led into the next theme. The next theme was what we called FANG, right? It was Facebook, Apple, Amazon, Netflix, and Google. And the premise was very simple. More people will have a cell phone today than they did yesterday. And by cell phone, I mean a smartphone, not a feature phone. More people will be on the internet today than there was yesterday. And there'll be more next month and next year. And more people will be using wireless communications instead of wireline communications. And it was this evolution of just more next week, more next month, more next year, more next decade. And those themes played out. And then we had enterprise software tech, and the cloud came along. So if you were really paying attention, you could literally invest in Apple in 2000 and hold it for 2 decades, right? You could invest in Netflix and hold it for 2 decades, or Amazon, or Google, or any of these, because nothing really changed. So I just kept chasing these it's all going away themes for literally from the late 90s, mid 90s, late 90s, all the way until really 2020, when it became evident, okay, the wireline to wireless theme has really played itself out. The internet is still there, but it's very mature now and has kind of played itself out. You know, all these companies that went from a few hundred million or a few billion to hundreds of billions and then trillions of dollars in value, well, they kind of played out. All of these big tech and cloud companies kind of played out. So then you get closer to 2010, of course, and then new themes come along. Well, what were those? In traditional finance, that was payment systems and Visa and MasterCard, and more people are going to pay with plastic than cash than they did last month. And you're going to have more people using credit cards next week and next year and next decade. So Visa and MasterCard became a great theme to invest in as they IPO'd. And then along the way, you had PayPal and Venmo and all the sort of payment processors that were new rails that were being set up. And of course, the one that brought you and I together, Bitcoin. You know, you get a white paper in 2009 and you get launches, and suddenly you say, wow, well, the whole central bank thing could just get replaced. There's not a bridge from the old financial system to the new. We don't have to have these rails that go from the old banking system and government and go to Bitcoin. We could just go to Bitcoin. And so you saw altcoins, or what you and I call shit coins, come along because everyone wanted to say, oh, there's Bitcoin, but look at all these great digital assets. And what really played out over the last 15 years? Nope, there's Bitcoin and there's shitcoin. There's Bitcoin and nothing else. There's Bitcoin, and why don't you just use Bitcoin rails like Lightning? And Lightning was suddenly going to destroy the Visa MasterCard. Lightning and Bitcoin were suddenly going to get rid of international remittances, right? And then what happens as you fast forward to now, you get more new investment themes. And the latest 2 investment themes are fascinating, right? Artificial intelligence, HPC, neo cloud hyperscalers. So all these companies that started investing in power, land, buildings, industrial hardware racks, alternative or renewable energy, waste energy. And they started making all these investments in the late 2010s leading into 2020 through COVID. There were regulatory issues. There's land purchasing issues. There's interconnect, not only power generation, but power storage and transmission. And then suddenly you get this whole backdrop that led into NVIDIA and GPUs and chips. And what am I going to use for my, LLM or my large language model for inference and all these different artificial intelligence like OpenAI and Grok and ChatGPT. And so if you really take a step back and then you say, okay, well, great. Now we have artificial intelligence. Well, what is an artificial intelligence system going to want to use for payments? Well, Bitcoin again, like here we are, right? So if you kind of say 1990 to 2000 was a series of all this infrastructure tied to the internet and telecommunications and networking, great. Now we take it for granted because you and I are using voice over IP and video right now through this system to be able to do the podcast. And then in 2000 to 2010, you add that whole next evolution of the smartphones. You add the evolution to all of the rest of the components that we were seeing with large scale internet companies that were going to be the winners that were scaling across the FANG trade. And then once you got to about 2010, we transitioned into digital currencies, payments, and all the activities that was going to lead into how to fund everything that we were playing with the decade before. And now we're arriving at this next generation of what is Bitcoin going to do at scale? How does it compete against physical commodities and stores of value and medium of exchange and units of account and measurement? And how do you protect yourself from inflation? But meanwhile, let's get more efficiency, more productivity, more intelligence across the network. And that's where artificial intelligence kicked in. So when I do all those things, Bitcoin has now become the heart of everything you have to own. If you can't own Bitcoin, you should own Bitcoin proxies, but I don't think those are treasury companies. I think those are really the Bitcoin ETFs. And for folks who just will never figure out custody, and then when everyone says, oh, that's defeating the purpose of decentralization and you're just centralizing all over again, I'm saying, well, guess who screwed up? We did. The industry we're in screwed up because we allowed Celsius to happen and BlockFi to happen and Genesis to happen and Three Arrow Capital to happen. And all of these horrific things happen because you and I would say, I'm going to own Bitcoin, but hey, I want to get some money out of it without selling my Bitcoin. Well, how do I do that safely? Oh, I'm going to go pledge my Bitcoin as collateral, take the loans and either buy more Bitcoin or use it to spend or to live off of, write off the interest. But then all of our Bitcoin was stolen by Celsius and BlockFi and Genesis and the US bankruptcy system. So then what? Guess what? Well, now comes along JP Morgan Chase, right? The people that said, this is fraud, this is crime, this is rat poison, this is a joke. Now, guess what? Oh, sure, bring your Bitcoin as collateral. We'll give you access to the rails. Oh, you want a tax-free event? Give me your Bitcoin. I'll give you the IBIT ETF, but now you can use that money for margin, collateralization, loans. And guess what? Now I don't have to trust that Celsius or some brand new group is going to blow up because at least it's JP Morgan Chase and we're doing this loop, right? And then the treasury companies, which are all influencers and scare the hell out of me. Outside of Michael Saylor, who's one of one with strategy, everybody else is like, hey, wow. I guess they didn't say I have a big OnlyFans account and I'm going to now do a Bitcoin treasury company with the spoils of our OnlyFans riches. We're just getting different kind of shitcoiners and people that migrated from a Wall Street boiler room into crypto. And I hate the term crypto. I hate the term digital assets. I love Bitcoin, but I appreciate tokenized assets because we're going to take real estate and every security that trades publicly, and we're going to stop having 9 to 5, Monday through Friday, bankers hours, holidays, breaks. We're going to be like Bitcoin, 24/7, 365. There's always a market. We're going to basically have Bitcoin. We're going to have Bitcoin rails. We're going to have Lightning Network sitting on top to replace Visa, MasterCard, and everything else. Great. But then we're going to tokenize all these physical assets and we're going to tokenize all these traditional Wall Street assets so we can enable 24/7, 365 trading and we can enable easy remittances around the world without, going to these less developed countries and you find 20 to 50% of their GDP is based on international remittances from people working in the United States or Europe and sending all their money back home.
Why do you say treasury companies scare you? Do you think they could lead to just a huge crash because there's no real value?
I always think their value is whatever the value of the Bitcoin they hold is. The reason I think for the average person worldwide should just stay the hell away from them is because they're probably not smart enough to do enough of the due diligence and the homework and really understand what they're getting. But what they're really getting is an operating company with risk, management, infrastructure, overhead, and personnel that is less efficient than just owning the Bitcoin. You get regulatory risk, SEC filing risk. You get risk to credit and traditional things that companies have to deal with across debt and equity and hybrid capitalization structures. Even worse, when you're doing treasury companies that are originated as a special purpose acquisition company, like a SPAC, you're inheriting dilution. You're inheriting all sorts of ugly equity that someone else paid zero for to get the warrants on the SPAC. The people who put the money into a trust that were basically parking their money to get their 2% management fee, their 20% return, and then they may or may not leave the cash in the SPAC when it does the merger. Then you're also getting the regulatory risk when the merger is announced, that 6 to 9 month window, they're going to be able to get all the audits. The SEC is going to approve them. They're going to start trading. So I watch all these people like they're buying, Mike Alfred made an investment. So what happened in ASST as a ticker symbol, right? It went from, he bought in the 85 to 95% range. He bought 1 million shares. So he invests like $1 million. It jumps 50% over the last 48 hours. But why does that matter? I mean, okay, so you have people controlling warrants who have a cost basis of zero. Anything above a penny, they can dump on those folks. People that already bought up here at these much higher prices are now seeing a surge. They can dump. So all that really matters is like, what's the MNAV? And why would you be paying a premium with all that operational and regulatory and filing risk when all you have to do is just buy Bitcoin or a Bitcoin ETF and you get none of that?
That makes a lot of sense. It's so fun because I've watched Bitcoin so closely, but I never invested. I mean, I had Saylor on my podcast and I never bought strategy. Probably was a mistake, but still, I just want to be as pure as cold as possible in Bitcoin and own it myself. Like that's the pure play, even if it means that I might miss out on like some additional gain. But I'm not interested in
there's
that.
an important point in this. So like what Saylor did and strategy and all the preferreds they've offered, they basically created a Bitcoin yield curve, right? That replaces a traditional yield curve. Now, there are exceptions to every rule. So like, let's say my mom is retired and she has whatever she has. Let's just say I'll use $1 million for easy math. If you're retired and you've built $1 million over your lifetime and now you're going to retire, I could make the case that it's much better for my mom to buy STRC and get a monthly dividend that's annualized at 10%. And if she doesn't want to have any exposure to the equity markets whatsoever, and she just wants to live off 10% per year or $100,000 US per year, she could buy effectively a preferred security that's pegged between $99 and $101. And instead of getting, 3% in a savings account or 2% in a certificate of deposit or a treasury, which, is dropping in value of some bond, whether it's corporate bonds or otherwise, she could just say, hell, I'm going to get a triple improvement on my savings rate. There's a little bit of risk, of course, but at least there's assets pledged against it. So I can understand where someone goes, if I'm going to get 3% on my cash in a money market, but I can get 10%, I have instant liquidity if I want to get out of it, and I can get paid once a month on that 10% interest. I can understand the logic of like, why would I want to own that? in that group of $7 trillion out there that is in money market accounts. Cash is horrible. Money markets are just as bad. Certificates of deposit are bad. Bonds are bad. So what are you going to do? I think you have to invest in markets, of course, but a lot of people feel like they're taking that big risk when they're retired or older. I think the actual rate of inflation is the rate of return of the S&P 500 or the NASDAQ 100, because the S&P 500 and the NASDAQ 100 go up or down effectively almost 100% correlated with the M2 money supply. The more money they print, the more the assets go up in value, not because they're worth more, but the currency's worth less. So I use the rate of inflation. I don't listen to what the government announcement is. I think they're lying all over the world. Every country lies what the actual inflation rate is. But what they can't lie about is how much money they printed. And that gets reflected in often the price of physical assets like real estate and in the stock market. So if you say, hey, the NASDAQ is up 10% this year, that just means that they printed 10% that they added to the money supply, and that is your inflation rate. When I calculate inflation, I believe it's more like 25%. The Fed target in the United States is 2%. All of that is just what degree of theft can I get away with to steal your money without you, committing crimes and anarchy and all this other kind of stuff that goes with it. But that social contract has been broken badly. So the 2% the Fed focuses on, the 25% I think exist. If it was 2%, because math, over 50 years, if you work from age 20 to 70, you're going to lose 50% of your wealth during those 50 years that you work if inflation is really 2%. That's how the math works. But since 2020 through 2025, we've actually seen inflation, I think 25, let's say we split the middle at 14%. That means you and I lost half our wealth in the last 5 years because math. That's the profound difference between 2% and 14%, means you lost half your wealth identically, but one was over 50 years and one was over 5 years. An order of magnitude worse. So the hurdle rate is I need Bitcoin because I need something that's growing faster than what I think is 25% per year. And if it's growing at 30 to 50%, it has a lot of volatility, but at least I'm preserving my purchasing power. But if you're working and you get anything less than at least a 14% raise per year, you're not even treading water. You're just losing money. You go from 50,000 to 57,000 and you think, hey, I got a 14% raise. I'm like, well, you're treading water. Nothing got better in your life whatsoever. Now, there's an exception when you're younger. I do this. All my kids who are 23 to 26, their W-2 payroll from their job doesn't go to their bank. It goes to Strike, and it instantly gets converted to Bitcoin. And then once a month, they use the bill pay feature of Strike to pay off. But as the price of Bitcoin's going up, they end up selling less and less Bitcoin. Every 2 weeks, their paycheck gets processed and they dollar cost average into more Bitcoin. And over time, their Bitcoin stack is getting bigger. The value of that stack is getting bigger. The amount of Bitcoin they're selling gets smaller. And my kids, since they started doing it when Bitcoin was probably $80,000, as we're close to getting 120, that's like a 50% reduction in their cost of living.
It's amazing because once you look at the real inflation rate, celebrating a 5 or 10% salary seems ridiculous, and it seems even more ridiculous if you save in dollars and not in assets. It's like a double edge of you want to save in Bitcoin, and you want to have an increase of your salary or raise or grow your company or whatever you do higher than this 14%, and then you're actually doing double good in terms of that and not double bad than what the average person is doing.
And it's completely unfair to younger generations because in the United States, our debt just hit $38 trillion. What is that? That's like make believe. So not only 38 trillion, but the last $1 trillion was added literally since August. So September, October. Oh my God. We haven't had 3 full months and we just added another $1 trillion. Meanwhile, the US government has to refinance $10 trillion of debt of that 38 trillion that's due this year, because when Biden and Harris were leaving office, they decided to ram through as much fake liquidity as possible before the election, hoping they could beat Trump. And they did really bad deals all the way throughout last year. And then Besson and Trump inherit all this short-term debt that needs to be turned over, and there's 10 trillion of it. So I assure you, interest rates are going to go down, and they're going to go down by force if they have to, because Trump and Besson are not going to keep signing up for $100 billion a month of interest on $1.2 trillion of interest per year. And this 10 trillion, they're like, we're going to drive interest rates down no matter how hot inflation is, because we need to refinance all the debt and then we can go back to printing, and they're going to run the economy hot. And we got midterms next year and they're going to go full bore. And as we've seen since the tariffs came out, tariffs are deflationary, not inflationary. And they already could actually cut the IRS and taxation out of the United States for everyone who lives here today. Already 80% roughly of the United States citizens could pay zero, and the tariffs would perfectly offset that. And by the end of this year, I expect that'll already be at 100%. And tariffs were the way that the United States funded the government before the creation of the Federal Reserve under sketchy circumstances in 1913. We had more money, less debt, a balanced budget before 1913 throughout our history, when we just used tariffs. And that was the simple thing, because the dirty secret is globalist corporations, which are the Fortune 500, Fortune 5000. They're playing comparative advantage all over the world, and they're trying to screw over one country versus another country to drive down the cost of employment, drive down the cost of regulation, drive down the cost of every aspect of their business. And they're not United States companies or German companies. They may say they are, but they might have been founded there. But BMW and Mercedes and everybody out of Germany are no different than Google and Apple and Netflix and everyone in the United States. They care about the world and their revenue and customers offset by their cost structure, which is why we see all these stupid policies of illegal immigration on purpose, H-1B visas. Everything is designed to destroy humanity in every country worldwide. It is absolutely mind-numbing that the goal is bankers up here, all of their stack of money and relationships and cronyism, and then they use central banks, not Bitcoin, as the money to then get principal and interest against the world across everything they touch, and then they get taxed to death everywhere. And what humanity is starting to do, excuse the French, is say, fuck you. That's what they're saying. We're done. No more. We're done. You want to tax me in London? I'm going to Dubai. You want to tax me here? I'll go to Portugal. People are just saying, I did not work my butt off to be exploited. I did not start from zero, get to something, and you're going to tax me when I work. You're going to tax me when I spend. You're going to tax me when I'm sick. You're going to tax me when I die. You're going to take from my children, from my family, and you just want it all pushed up to you. And the answer is, fuck you. No more. No more. We opt out. You and I opt out with Bitcoin, but we also opt out with where we choose to live. I left California years ago for Texas, because why do I want to pay state taxes when I can come to Texas and pay zero state taxes? I could go to Florida, pay zero. A lot of folks that over in Europe, where are they going? Dubai, Abu Dhabi, the UAE. They're saying, bye-bye. You're going to tax me 50, 60, 70, 80%. All the entrepreneurs of Europe say, yeah, I've had enough. Goodbye. Because capital doesn't have to stay there. But what's amazing, let's use the perfect example. A famous international celebrity, George Clooney and his wife, right? What did they do? They come to the United States. They live in the United States. They make all their money. They play political activists for the left. They push all these policies in California, destroy every aspect of life in California. And then what did he do? They pick up, take their wealth, and run to Italy. And they're going to raise their family in Italy because they don't want to live with the consequences of the horrific actions that they advocated for while they were being paid off to be a useful idiot for the system. And it's the same way everywhere. Create all the problems and then bail to Texas or Florida in the United States. And then what am I going to do? Oh, we're going to try to advocate for the same policies in Texas and Florida that didn't work in California. We moved here for less crime, a better life, better education, better place to raise our kids. But no, now let's try to do the same thing because it'll scale in Texas or in Florida, even though it failed miserably, much like communism and socialism fails miserably around the world. And meanwhile, we're watching New York City about to elect a guy who's never worked a day in his life, who's part of a lucky sperm club, who's an intelligence asset being placed into New York City to give away everything for free so that all the illegals there will keep voting because this is how we're supposed to blow up all Western nations, right? It's funny. Immigration. It's fine to destroy every country except for Israel or China. We see where the immigration is happening. My favorite ruling last week out of Sweden, a rapist gets let go because the rape didn't last long enough. So as a father of 7, 5 daughters, 23 to 26, if that happened, oh my God, we wouldn't need the judicial system. I would go after them myself because the idea, Robin, you get married, you have children, your daughter is raped, and the judicial system tells you, well, Robin, it's okay. She wasn't raped long enough. Yeah, okay, sure. That's fuck you. That's the answer.
The most important thing for your Bitcoin journey is not buying Bitcoin, but it's how to keep them. And yes, you have maybe the right tools, but how do you actually go ahead and stick it all together so it's the most secure for you personally? Self-custody is a deeply personalized journey, and the Bitcoin way is helping you exactly finding that correct setup for you personally. They are also helping you with securing your own cybersecurity. And if you want to go one step above all that, you can even get a consultation for a Plan B residency. Go to thebitcoinway.com/Robin and you will get a 30-minute free consultation. I finally and officially mine Bitcoin. This is not just something to stack more Satoshis, but it's most importantly also to support the network. Individual miners are the ones that keep the Bitcoin network decentralized. And by the way, you get KYC-free Bitcoin. That's why I use simplemining. I get an actual proper Bitcoin miner. They set it up for me. They repair it if it breaks down. And most importantly, they let me choose the pool and even connect my own full node. I'm completely sovereign and I'm completely in control, and I can sign up with Ocean, no account needed. I just give them a Bitcoin address and then there's mining going on. No KYC, nothing. So if you're ready to mine Bitcoin, go to simplemining.io, tell them you come from Robin, and let's mine Bitcoin together. I want to tell you about something very special to me. It's called Microseed. If you hold your Bitcoin in self-custody, and you should, you know how critical it is to secure your seed phrase. You should not have them on paper. You should not have them on anything else than titanium. With Microseed, you can engrave your 12 or 24 word seed phrase, the entire seed phrase, onto a 1-inch small washer. Yes, just one washer. All 24 words on that one washer. You can hide that thing everywhere. And even better, you don't need to buy a new kit every time you have to get a new wallet. You can make unlimited backups because Microseed is not selling the washer. Microseed is selling the device that stamps the washer. So you get the full full kit with the device, with the washers, with the hammer, with everything you need to get started today. And you can make with that unlimited amount of backups. Go now to microseed.io. Again, that's microseed.io to get your last backup tool you ever need.
There's been a similar case actually in Austria where, and I don't remember why they got let free, but it was actually a group of people. It was not only like one; it was like 3 or 4, if I remember correctly. So like it's hard. Like you always hear that, and you think like, oh, like that's just like a made up story, and then you're like, oh, that actually happened. Like those things, like it is outrageous. Like it's so outrageous that you don't even want to believe it. It's crazy.
Yeah, and I mean, you looked at the cover up for decades in England, the rape and grooming gangs, a real thing. And the problem is that much like pedophilia and all these other horrific acts, that rational, normal people, you and I would go, come on, no one really does this. No, there are satanic pedophiles in charge. There are people who hate you, who want you dead, who want your children dead. And no one anywhere in the world knowingly brings random ethnicities and religions and mass immigration into every place unless you're trying to kill it. Unless the goal is to have blatant criminality. And it's done on purpose to have people's morale destroyed. I'm going to bring people in and I'm going to give more protection to the criminals than the victims. And in fact, if you object or speak out about it, we're going to arrest you for daring to call out the fact that someone was a criminal, or that someone was raped, or that someone was killed. And it's just gaslighting. And it's like Netflix. They'll have some historical issue and they will recast it. And suddenly you'll have all these characters that are trans, gay. Of course, then it'll be a black guy married to a white woman. Of course, it will then be the villain is white. They'll just invert reality and they'll push it through television, radio, and every single bit of content you see to gaslight you right to your face and act like it's normal. Or they'll say, hey, we have a term for that. It's minor attracted person. And you're like, no, that's a pedophile. Or someone was arrested for inappropriate conduct with a child. You're like, look, when a child is 4, that's called rape. That is called sexual assault. And there should be horrific consequences. And so when people are trying to recreate the world to get Group A to hate Group B, and Group C to fight with Group D, and to get Muslims to fight Christians, and to get blacks to fight whites. This is all just created specifically to infuriate the world, fight amongst themselves while all the wealth and power is stolen, which always gets us back to Bitcoin, because Bitcoin is peace. Bitcoin is love. Bitcoin starves the money printer so you can't have war. And Bitcoin provides that the most dangerous type of men and women on earth, sovereign individuals who take full accountability and responsibility for themselves, their actions, their family, who want to have a traditional family unit, raise their children, and create good citizens for the world. But that is directly opposite to have people like you and I that can think for ourselves, that don't believe the propaganda or the narratives or all of the false flags used. It's as bad as Israel, October 7th, killing their own people so that they could justify a genocide of Gaza. That's it. That's what it was all about. Just like 9/11 in the United States was created to pass the Patriot Act and take constitutional rights away. And it was used as a bullshit excuse to go after the Middle East, especially Iraq at the time. But if you look back at U.S. Policy, Greater Israel was U.S. policy. It was the U.S. being subservient to a ridiculous group of folks in Israel And what did they want to do? They wanted to destroy 7 countries to get land for Greater Israel. Who are the 7? And think about what's happened since 2000. Lebanon, Libya, Syria, Somalia, Sudan, Iraq, and my favorite more recently, Iran. Like, there's no accident at all that the 7 countries that magically compose Greater Israel are having the U.S. military-industrial complex rain down for Netanyahu and Israel, and no one in America gives one rat's ass about any of it. They don't want our money there. They don't want our troops there. They don't want the violence. And the only good development more recently of any of this nightmare is that the GCC and the financial industrial complex has finally decided that they are going to upend the military industrial complex because they would much rather the Middle East to have peace, and they would much rather the Middle East to look like Abu Dhabi, Dubai, Qatar, and Saudi Arabia than what we see everywhere else in the same region. So a lot of the military industrial complex, as you've seen, has already started pulling out of the Middle East. And now we're dropping ourselves off the coast of Venezuela in Central, South, and Latin America because drugs, right? And that's laughable. It's not because of drugs. If you want to stop drugs, you just go to Langley in the United States and go to the CIA, who controls, manages, and operates all global drug trafficking. Operation Gladio is a great book by Williams that chronicles even the Vatican using the sovereign territory of the Vatican Bank to get a 15% cut of the global drug trade to launder all the money through the global drug trade. But when you see people go after Venezuela or they go after some other Central South Latin American, that has nothing to do with drugs. That isn't the problem. That has to do with Venezuela has a lot of oil, just like Iraq had a lot of oil and gold, just like Libya had a lot of gold and a lot of oil. And all of these things, you realize, are narratives. You bend the knee or we assassinate you. You bend the knee, and if we can't assassinate you, then we send the military in to do it for you. And this has been what's been going on even with Russia, Ukraine for years and years, sadly. Zero reason there should be any conflict between Russia and Ukraine, except the United States violated purposefully every treaty we signed. NATO violated every commitment it made. And Ukraine was used as a money laundering pit. The United States, through USAID, funded the color revolution that overthrew the freely elected government of Ukraine. It's just harsh realities. Like, actual history is very specific. You can go down even to World War I, when the Russian Tsar and his family were killed. Why did Germany rise up? It has nothing to do with what we were taught. Germany rose up to fight the Khazarian Bolshevik Marxists that were doing the Red Terror and killed over 50 million ethnic Christians in Russia after they were financed by the global bankers, the Warburg brothers, the Rothschilds, and the British monarchy to kill the Russian Tsar. Because what did they want? The oil and gas. They wanted the resources. It's all just the same blueprint with the same people over and over and over again.
Will Bitcoin fix that?
Well, Bitcoin can fix a lot of things. I think Bitcoin can fix the money printer, and a Bitcoin standard would force each individual country to then go to its citizens, like it used to happen, and say, we want to conduct war, and we would like to raise $10 billion of bonds. Would you like to buy war bonds? And either the country bought the war bonds or they didn't. So the war was funded because you and I decided to fund it. Or if we didn't believe in it, we didn't. So the was starved. There was no money printer. War is very easy to conduct when you could just print currency to pay for it. But Bitcoin doesn't allow that. So I think Bitcoin can fix that, but the entrenched system in charge isn't going to just magically say, we don't want to have all the power and wealth anymore. They say If I asked you who the richest man in the world is, who would you say?
I mean, Elon Musk is the richest known guy, I guess.
Yeah, so you said the key word, known. Soros, $1 trillion, right? The Rothschilds, $3 trillion. So the people with the real concentrated wealth effectively pay and control keeping themselves off the list. So we would say Elon Musk, Larry Ellison, Jeff Bezos, Bill Gates, and on and on and on. But the real power and the real money is just private. It's the same 13 families. The largest group that controls the most have 5 trillion. Rothschilds are a step down at 3 trillion. Soros is a step down at 1 trillion. And that's how the world actually works. It's absolutely flabbergasting.
It's crazy how close Elon Musk is now coming with $500 billion already. It's like,
yeah. Well, at least, it's interesting to see the people creating things. It's funny to watch the left turn on Elon Musk because he supported Trump, even though they were supposed to be, we care about green. Well, what? So all of Tesla is suddenly the Antichrist, right? Because Orange Man bad. It's really quite funny, honestly, to watch. But it's also interesting to realize how is the decision-making working for, SpaceX, Tesla, X, Neuralink, the Boring Company. Like Elon Musk can seemingly do no wrong. He always has all the money needed to do everything. He's always plugged right in and looks like, the superhero. And you kind of wonder, is just everyone else stupid? Or is everyone else just not able to get the same contracts? Or do really the world's population just love his products that much better? What is the magic, right? Larry Ellison and Oracle have their origins from the CIA. The database is to do work. They've been neocon Intel assets their entire careers. And you can see it over and over and over again. Palantir, Peter Thiel, another great example. Like US Congress bans the collection of all this intelligence on the human population and bans Promise software that came out of, very interesting company. And the next day after Promise is banned by Congress, Palantir gets created. Same people, same purpose. Mark Zuckerberg comes along with Facebook. Well, that was magically virtually the day or the week after Congress banned LifeLog, where the Intel apparatus wanted to trace you, your friends, your connections, and all of your life events. And Congress said that is a complete breach of the US Constitution. Shut it down. And then magically, Mark Zuckerberg starts Facebook. Who would have guessed it? The next day. Fantastic, right? So you see all of this. The CIA has In-Q-Tel, its venture capital arm, and you see all these little tentacles going out every single time. And so you really wonder how much of all the contracts and all the revenue were because they earned it, and how much of it is just directed to create winners that are doing what the system and the elites up here need it to do.
It's so crazy to think about that. And I don't know if it fits in there at all. But what do you make of like companies that basically tether stable coins and all of that? Like, how does that fit into the picture now? Because I have this weird feeling that Europe is going ahead with CBDCs, and in America it's like no CBDCs, but they're saying yes to stable coins. And I'm like, isn't the stable coin kind of like a CBDC kind of a thing?
Well, you're right. I think so. There's a couple of things that have happened. Obviously, since Trump came into office, obviously they took all this criminal accusations against companies and people and anything tied to digital assets, and they tried to stop them, shelve them, dismiss them. More recently, CZ gets a pardon, right? So any actions by Biden-Harris, they've tried to kind of undo those as it relates to legal problems. And God help us if anyone ever gives a pardon to SBF, right? CZ's little different scenario, but between Binance and Wintermute suppressing the price of Bitcoin and knowingly buying and dumping on the market, I think we're all kind of sick of Binance and Wintermute. So CZ, I don't really, I don't think what Biden-Harris did to them probably was deserved, but he's probably guilty of a whole lot of other things, which I kind of scratch my head on. So Trump comes in. Obviously, the first thing they pass is stablecoins. What is stablecoins? I do call it more, you say CDBC, or CBDC over in Europe with UK launching its digital ID. Yeah, that's mass surveillance. Here's your social credit score like China. You will do what you're supposed to. You will buy what you're supposed to. And if you don't, we'll turn you off, which is like why most of people in America hate electronic vehicles. They don't want to be tethered, no pun intended, to 350 miles around their house where they have to plug into a wall. So the first thing the Trump administration did is pass stablecoin. Well, why? Okay, several reasons. First reason is then they have a natural buyer for treasuries, which they need to finance our debt, and to have a buyer now that China, Russia, and the BRICS complex doesn't buy U.S. treasuries anymore because they understand the game and they're just being printed away. Japan stops buying. So now the Bitcoiners are buying, right? Because fiat gets converted into stablecoin. Stablecoin buys Bitcoin, but the stablecoin reserve with those fiat dollars is getting into reserves. That includes a whole lot of U.S. treasuries. So first checkbox is, hey, we can support the dollar. We can support our debt offerings. And now we've got the Bitcoin, or the crypto community is going to come to rescue us. That's item one. Item two, well, once you take Zelle or PayPal or Venmo or all of the above, and you use digital asset rails or crypto rails and stablecoin rails, well, guess what happens? You might not have a central bank digital currency, but you have a bank digital currency, a BDC, not a CBDC, but a BDC. So you didn't really do it, but you sort of did it, because now the entire banking system that are connected to Venmo and PayPal and Zelle are going to start doing international remittances under the guise of low cost. But what's really happening is we're just exporting the US dollar around the world, and everybody else is going to start transmitting through these less expensive remittances. So that's bad news if you're Western Union. That's bad news if your government's getting 20 to 50% of your GDP from remittances, and you're taking from all those families sending the money back home. But now you have step one is buyer of U.S. treasuries and supporter of the dollar. Step two, a bank digital currency, but we're opposed to CBDCs. We're opposed to surveillance, but we want to be able to trace every transaction on the blockchain. So you're like, okay, really? So then the third step is now the Market Structure Act, right? So they passed the Stablecoin Act. Now they're getting into the Market Structure Act, which now sets up traditional fiat banking. You can custody Bitcoin, Ethereum, and these other stable coins. You can have who's going to get the yield off the stable coins. Is it the banks, which is what the banks are trying to do? Or is it you and me who actually own the money? And that should be a rate of return on the stable coins I hold. So you're getting all these battles. And then the last part of stable coins in the Market Structure Act will allow legacy financial institutions to connect to next generation crypto and digital asset pieces globally. All the authoritarianism and the tracing and the banking at the center. And it's trying to do what I was telling you earlier on the investment thesis. They want a bridge. And my belief is I don't need a bridge. I've lived through 5 investment theses of why I don't need a bridge. Blockbuster Video, you didn't need to bridge to Netflix. You just do Netflix and Blockbuster is no longer necessary. You just do this and my feature phone is no longer necessary. So we all know, who really get the tech and get the regulation and get the legislation, that this has nothing to do with tech. This is a fake bridge from legacy financial institution to what's going to exist in a tokenized asset class later. And that's really what stablecoins are all about. The final legislation they're going to pass potentially then, after the market infrastructure is done and the market structure is put in place, is the Bitcoin Strategic Reserve. Well, what did they do recently? The US government took down a massive criminal operation around the world. They said, well, what's the next best thing to buying a strategic reserve? Confiscating it, taking it, right? So the US is doing a very good job to preserve all the Bitcoin that it's been seizing through the IRS, through Treasury, through the Department of Justice, and through any sort of criminal action. And now they've got, a massive stack of Bitcoin. I think there are over 350,000 Bitcoin now. Now, that doesn't mean they can't try to buy 1 million Bitcoin through a Bitcoin Strategic Act, but right now they're just having a good job confiscating it. And now what's going to happen with Wall Street? They want you to bring your Bitcoin, drop it off with them, convert it into, like a BlackRock IBIT ETF, and magically you have a situation where you're going to take loans against collateral. Well, guess what? Someone forgets to pay. They don't pay correctly. JP Morgan, Wells Fargo, and other banks are going to just seize the Bitcoin. Or you're going to show up with your actual Bitcoin. You're going to give it to a bank because they're going to give you credit facilities and they're going to give you cash and all this other stuff. But now they control your Bitcoin. And now it's all centralized all over again. So the early OGs of Bitcoin basically said, I'd rather have the convenience of the traditional banking system and get access to everything I want to make my life wonderful and great. I don't want to go through and trust Celsius or BlockFi or LEDN or Voyager or anybody. They don't want to trust anybody. Oh, but I will trust, UBS or I will trust the Bank of England. I will trust JP Morgan Chase. So we're just kind of doing Groundhog Day.
It reminded me of the scene in the first Matrix movie where the guy goes back and says like, I want to have the stake in the Matrix and I don't care about like a freedom aspect. It's like, like you trade the freedom and the control that you have over your Bitcoin for more convenience in the traditional financial space. And like, that's basically the stake equivalent. Really good. Like, such fascinating. I have the feeling like I could do with you like 10-hour long podcast because there's so much question that pops up every time we go on a rant. But I have one question that I ask each and every one of my returning guests, and the question is always, what have you learned outside of Bitcoin since your last appearance on the podcast?
Two big things that I've been working on that I've learned a lot about. First one is I dove very, very deeply down the AI, HPC, neocloud, hyperscaler space. So I've followed a lot of what Mike Alfred does on his investment thesis, but jump on a lot of things to follow content. I've done a lot of research on my own, but I've been in like IREN is the ticker symbol, and cipher mining, CIFR, for a long, long, long time. And I'm wildly bullish in the AI, HPC, neocloud, hyperscaler space because there's such a shortage of compute power and power that these companies are going to kill it. They're going to do so amazingly well because in the late 90s, when the internet sort of bubble popped, you had a bunch of unprofitable companies that were little startups funded by venture capitalists. And they just pulled the financing plug and it all died right at the end of 99 and 2000. This is not that. This is like, okay, there's no startups here. This is no venture capital financing. This is Microsoft. This is Oracle. This is Apple. This is Google. This is NVIDIA. These are massive corporations with huge balance sheets, massive free cash flow and profit, and they're investing on a CapEx basis in a way that humanity has never seen. So between now and 2030, it's going to be straight up and to the right. And it reminds me of just getting started with internet adoption. And every existing megawatt available globally is going to be bought, contracted, leased out, and every development is going to similarly be leased out, contracted in advance, even before they're coming online. So that's one big area of investment opportunity in parallel to Bitcoin, I think, that matters greatly. And outside of Bitcoin is the most important space for anyone to learn and dive into deeply. Because someone, if you're Meta, Facebook, Instagram, you are not going to lose the AI race. You're just dead if you don't win that race. So their investment is going to be unlimited. The other thing is that I've been spending a lot of time working on legacy Chinese and Russian bonds that date between 1898 and 1937. And I have about 5 lawsuits outstanding against the governments of Russia and China, including their central banks, including their sovereign wealth funds, and including their treasury operations for failure to have paid back these bonds that overlay around the same area of the Bolshevik Revolution. The Russian bonds were actually issued in 1916. The globalists funded the Bolsheviks to kill the Russian Tsar in 1917. They repudiated the debt in 1918. And what's amazing about all that debt is based on the 5.5% interest rate, the biannual payments, and the gold provisions with gold going up so much since the start of the year. These bonds from Russia are now worth $367 billion. And then in parallel, the unpaid Chinese bonds, some of which also have those gold standards, are now worth probably more than $30 billion. And we are working on behalf of U.S. investors who have not been paid back to intersect this history that we've been discussing and the financial obligations that countries have entered into, along with loan agreements and covenants and bearer bond asset obligations that they have failed to pay, but became superpowers nonetheless. And so it turns out on the Russia side that all investors globally were paid off by Russia, except for the US investors, which we're trying to make sure happens. And on China, it's even more interesting because all of the 1898 to 1937 bonds had loan agreements and covenants, and theoretically a statute of limitations might have ran out. But in 2020, during COVID, China came to Wall Street and had them raise a bunch of debt because they were cash constrained during COVID in China. And that started a covenant breach of the loan agreement, which then opened up residual historical necessity for them to pay off the bonds. So I've been working a lot lately, domestically and abroad, on all these bonds so that we can bring some discipline, some responsibility and accountability to people who think they can either print money endlessly without consequence or issue debt endlessly without consequence.
I love that. That's a really, really nice one. And it's there's so many more interesting topics in there. I just have to reinvite you for third round, I guess. And we always have this end routine in the podcast where the previous guest is asking a question for the next guest without knowing who the next guest actually is. And there's an interesting one, and I'm really curious about your answer. The previous guest asked you, what excites you to get up in the morning?
So the greatest thing about it excites me to get up in the morning is that I open my eyes and I am alive. It's funny because the greatest gift everyone can get that should get you excited in the morning is that you get to live another day and you get to do whatever you want to do. I go to a lot of entrepreneurship classes and I talk to a lot of students at times, and often I'll ask them the same question. I said, I am willing to give everyone here today $1 million each today, if you're willing to accept one condition, but how many of you would like the $1 million? And all the hands go flying up because they want the $1 million. And I said, well, you haven't asked about the condition yet. And I said, well, the condition is that you will be dead in the morning. And they're like, well, whoa, like, wait a minute. I don't want $1 million. I can't do anything if I'm dead. And I said, that's exactly right. And you should never forget that you just put a value of you opening your eyes and having an opportunity to do something tomorrow worth $1 million. So why aren't you getting up, working out, pursuing your dreams, working hard, and going to do great things in the world if you already valued you opening your eyes is worth $1 million? Why? And you get a lot of strange looks. So that would be my answer. I would say for my question for your next guest, let's go with something very, very, very controversial. Ask them if they believe that the United States fought with the right side of the Allies in World War II or not.
That's a fun one.
Yes.
Yes.
Said differently, did the United States select the correct group of allies to fight the correct war? And who actually won World War II?
I have to note that down later. And like that's a really interesting one. I mean, it is always it's so interesting because we always say like the winners write history. And for me, it's like they do because they decide how to interpret the history and like how we look at the history. But the history writes itself. And I'm curious actually how it will look, because now with a global world and like cameras all over the place, like not just like the public cameras, but like all like the phones and like all the video data and like everything. I'm really curious on how differently we look back in 1,000 years on like this specific time, and if it will be very differently reported than we live it through right now.
Well, I do believe that what we're going to find in our lifetimes, and it'll be interesting to see 250, 500, 1,000 years from now, what's written about this era. But I think this era is going to be looked at as completely absurd, absolutely delusional, where debauchery and complete propaganda overwhelmed humanity. And I think that history will show that the same globalist bankers who funded the assassination of the Russian Tsar in the early 1900s were the victors of World War II, and that the absolute wrong people won.
Curious what the next guest will say. Will be fun. Yeah. Thank you so much, Alan, for being on the podcast. Before I let you go, where can people find you and ask you questions?
Yeah, so online, if you go on X, at Alan Knit, ALANKNIT is my X handle. I tend to put out lots of thoughts and issues there. And also for people who like to invest, I actually, in my pinned tweet, I always put the investment model I use for all of my personal assets and everyone close to me. I probably manage about 35 accounts tied to friends and family and funds and myself and colleagues and people I've known throughout my life. And that is exactly how I invest all of my money and why. And for folks trying to think through how they manage their portfolio, how they get protection from inflation, and how they can find those next 10x to 100x opportunities in the public markets, it's probably a good starting point.
Awesome. Then thank you so much for being on, Alan, and thank you so much for everyone that is watching and listening for joining us today. As always, I'll be back tomorrow with another episode. Bye-bye.
This content is for educational and entertainment purposes only and does not constitute financial advice.